Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, August the 16th, 2013. So let's kick this off with the Dow Futures as we usually do on the daily chart. And in last week's video, if memory serves me correct, we were looking for a push into some of these extension levels. Let me just zoom out here. So we were looking at the 1272 and the 1618. I think those levels may still be in the cards, but essentially what we've done is we've pulled back. So we didn't get higher prices above these highs. We've essentially pulled back. What I'm essentially looking at here is a couple of different things. Let me just kind of break it down. So the one thing I'm looking at is I'm just going to delete these fibs and redraw them just for illustration purposes. And I'm going to, let me just delete these. I'm just going to zoom in a little bit to the current price action. Now, what this is starting to look like to me is this is starting to look like a head and shoulders top. Now, the confirmation of a head and shoulders top would need to see the completion of this type of a pattern and the breaking of a neckline, which would come down, once the pattern is complete, somewhere around 14,400 or thereabouts, unless the right shoulder ends up being slightly on an angle. So just for illustration purposes, let me redraw this. So a head and shoulders top is a long ways off, but it would look something like this. Here's the left shoulder, here's the head, and here's the right shoulder, and we'd be looking at something like that in the break of a neckline. Now the reason why I'm mentioning this is because these are very hard patterns to trade when it's not obvious that the pattern is in the process of setting up. So let me just be clear on this. When you're in this kind of situation where you're developing a head and shoulders sort of pattern, you get like this wide range and you're looking for direction, but you just get, this sort of choppiness back and forth. And then you don't really realize, if you're swing trading, you get chopped up a little bit and then you don't really realize what's taking place until and when, the pattern has more fully formed. So I'm cognizant and aware that we may be setting up one of these patterns, but this is going to take literally weeks to unfold. So what I'm looking at in the short term then, with that in mind, is that if we are potentially setting up some kind of a head and shoulders pattern, that we could do this kind of situation. So on that basis, then what I'm going to do is I'm going to dive into a fib analysis here, and I'm looking at this last swing low to this last swing high. The swing low comes in right around here. The swing high comes in around here. And as you can see, we've pulled back a 50% retracement of essentially this move from this low to this high. Here's the 50% retracement. The 618 comes in around 14,900. So what I'm actually looking for from this move is, if you look at the fact that we've tested the 50% essentially on Friday, we could come down into this 618 zone. And if you look at momentum is bottoming out. So and if you look at the MACD is testing zero line support because we're trading above it. So essentially, let me just switch the pen here and let me just look at this, try to be objective here. We are in an intermediate downtrend, but what I'm actually looking for in the short term is to see if we're going to hold this 618 anywhere above this 618, above 15,000. We could even probe below it a little bit. And then I'm going to look for momentum to bottom out here and to roll back up to the high side above the 20 mark, above the 20 line. That is a terrible writing. So above the 20 line, and see if we can get something going into support and push back to the high side and just get a little bit of a push back up, maybe to retest somewhere around, I'm going to hazard a guess, around 15,400, 15,440, this kind of action here. So I'm not looking for a major move at this point in time, but what I am looking for is to see if we're going to find support in this this 50 to 618 fib zone, and if we're going to, momentum's going to bottom and push back to the high side, and then I'd be looking for a push into this sort of trend line here. Let me just extend this to the right. So essentially a push into this trend line action. So I hope that makes sense. Even if we break above it, that would bring us into here. But essentially, I think the easy target would be a retest of these highs and a test of that trend line. And if we draw a horizontal line there, that would bring us into somewhere around, let's call it 15,280-ish, somewhere into that level. So I don't like the short side at this point in time. We could push down a little bit lower into there, but I don't like the short side for the simple fact that, momentum is bottoming. So I think we have to be careful here, and we have to expect that we could find support there. Now, above where we are here, we haven't quite tested it, but we have a strong level around 15,000 horizontal support, and we have a strong level around 14,800. So I would consider this entire zone an area that we have to look at, between 14,800 and 15,000 as a potential, strong support zone. So I'm not really looking at a short into that zone. I'd be looking to see if we can find support, push off out of that zone for at least one bounce higher. After, if and when we do get that bounce, then, I'm not really looking at this point in time for a break of the highs until and when we do get some price action up there and it looks like it's going to break that. So at this point in time, I'm just looking for a small bounce, and I'm looking to see, we could possibly retest the highs or some of these higher levels. We may be looking at higher prices, but the seasonal tendency at this time of the year is just to sort of chop around. And I wouldn't be surprised to see, just sideways action in this entire zone. I hope that makes sense. It's not a very promising outlook, but it is, I'm not really that interested in just jumping on the short side at this point in time. So if you're looking at getting short this market, you can do whatever you want, but I'm personally, from my own analysis perspective, being cautious on the market at this point in time. So I'm not looking for any strong bias one way or the other, just recognizing where we do have some obvious support levels coming into play after, this pretty significant pullback where, this is a multi-day pullback. So let's take a look at the S&P futures. You've got that same sort of analysis coming in where you've got a low in place, a high in place. Let me just delete these fibs and redraw them. Here's the intermediate low. Here's the intermediate high of this last swing move. You've got the 618 coming in around 1610, and you've got momentum, getting close to bottoming. We could get another, 1 to 2 days of downside, but I'd be very cautious beyond that point in time. I'd be looking for some kind of a bounce, unless some kind of crazy news comes out and just, shellacks us lower. So same analysis there. Let's look at the NASDAQ. NASDAQ looks a little bit stronger, and I'll just redraw the fibs there as well. So you've got this low, this high, and the 618 comes in around 2940. So I'm looking for the same, the same sort of analysis there. Let me just extend this to the right, and you've got a long-term trend line coming into play right into that zone. So let's take a look at the IWM, which tracks the Russell. So the Russell, you're looking at about $100. You're looking at about $100, fairly strong support where you had the breakout of this swing point high, these swing point highs, and you've got a trend line, and you've got that level coming together right in this zone here. So I'd be looking at, momentum starting to bottom here a little bit. I'd be looking at about 100 even as fairly strong support. I wouldn't really be looking at a lot of downside from there at this point in time. We'll have to, see where we close out next week and reevaluate. So let's jump over to the transports. Let's take a look at the transports. So the transports are into, some support levels right around 62.91. You've got the same analysis there, momentum sort of bottoming. We'll need to see if we're going to find support in there. You've got that one green candle, but it's, it's not to say that, price action is going to stop there, but it looks like it has found some intermediate support. That comes right into the 50% retracement. The 61.8 comes in around 62.26. And it's not, there's really not a lot to do here. It's just to recognize that, maybe the short side doesn't look that great just yet, and we might be coming into some support. So I'm looking for a potential bounce somewhere in and around, where the 618 lines up. So let's move on to some markets that are really moving. Let's take a look at the gold market. We've been talking about the gold market. I think I mentioned in last week's video that this looked like if we could get back up above that trend line, then we'd probably be off to the races. That's essentially what happened. And we're looking at, 1380 is a pretty strong resistance level. And we've had, this isn't hindsight, we've had 1380 on our chart. We've got a downtrend line, coming down right around that level. So I'm looking at this zone between 1380 and 1400 as some pretty strong resistance. If we can get above 1400 or get above this trend line on a clean break, then we're really going to have to reevaluate the gold market and see, how much higher we could go, because, we were talking about this was an early stage reversal. We broke above it. We were looking at 1380, 1400-ish, and possibly, 1450-ish, or, these highs around 1479. So if we do break above this trend line, I think 1479 would be in play. But, until we get above, I think 1380 is fairly strong resistance. And I think 1400 is fairly strong resistance. But if we do break above that, then the next area that I'd be looking at as an obvious level would be around 1480 in the gold futures. So I like that. I like, how we broke out of this pattern fairly cleanly. And if we look at silver really surprised me, because I was looking at $22 as potential resistance in the silver. I didn't really think we'd get above $22. I thought we'd hit 22 and then pull back to logical support, but we just powered. I mean, literally, we powered through that level and we went right up to just over $23 an ounce. So silver's been, I think, a little bit stronger than the gold, and it's been a real shocker. This is where I thought the market would essentially stall out in the short term and pull back. So this has been a real shocker. This is a real strong market. We broke above the MACD 0 line, but I'm very cautious on this now because momentum's around 97 in the slow stochastic, and it's a little bit overdone at this point in time. So if you're not long this market, you've missed the move. I'd be looking potentially for a pretty decent pullback, which we might not get. So this move is essentially underway. And I think you really need to look at, where the logical pullback levels might come in. At this point in time, if we pull back to 22 and hold 22 and then start pushing back off, that might be a good level to look at. I like this trend line, but I'm not sure that it's going to pull all the way back down to that trend line. So other than that, I don't really have much there in terms of potential pullbacks. The other thing you could look at is wherever it stalls out and it pulls back to, you could look at an intermediate. Let's say it stalls out there. You could look at where the 50 to 618 comes in once it actually, starts to pull back. That's sort of what I'd be looking at. You've got to assess it on a day-by-day basis because, looking at this 1 week out might be difficult, and things change on a day-to-day basis. So that's sort of what I'm looking at there for the silver. Let's take a look at the copper. The copper looks really strong, and I think, from this high to this low, you've got, the same levels, 339 to 349, I think we were talking about as potential levels to test if we got above this trend line. And, we traded as high as just above 336. So, that analysis still hasn't changed from last week. Let's take a look at a couple of other markets. Let's look at the natural gas. The natural gas held 325 and looks like we might come in and test potentially 352. So we were talking about, this breakout failed, and then we were talking about potential support around 325. We probed above that and we're pushing back off. We had a momentum shift off of that level. So I think 352 potentially is in play. This scenario sort of played out off of 325, even though we had a sort of spike below that. We did ultimately find support around that level, and we're pushing to the high side. If we take a look at, let's take a look at the crude oil. Now, I'm liking the crude oil here for the simple reason that it looks like we're putting in this kind of box pattern, and I'm looking to see if we can break above $108.73 or thereabouts. It's basically the high of this box. Let's call it 108.80, just, for simplicity's sake. So if we can get above this resistance at 108.80, I'm just going to change this exactly to 108.80. If we can get above that level, I like that for a potential, this would be like a Darvis box play. And if I actually jump over to the momentum charts, and if we take a look at the CL on the momentum charts, here's where the Darvis box comes in, and we had a false signal here. With the break of this low, we're in a squeeze, we're in a low volatility environment. If we can break above the high here at 108.79, 108.80, it's going to complete a Darvis squeeze pattern, which is a pattern that I've sort of been looking at for a long time now, several years. So it's the break of this Darvis box while you're in a squeeze. Then you could get volatility return to this market, pushing you back to the high side. This box is about 108 to 102.50. Let's call it's about $6 wide. So if we do break above 108.80, we could get potentially a $6 move to the high side. I was looking at, if you've been following my videos, I've been looking at 110 potentially to 115. So the completion of this Darvis squeeze, if you take 108, let's say 108.80, that's some terrible writing, but plus $6 would bring you into about, what is that, geez, I can't even count. 108 plus 6 is about 114.80. So that would bring you, the completion of this Darvis squeeze would bring you to the higher end of that, $115. So I like this setup. If we can get above 108.80, then I'd be looking at, potentially 114, 115. I like that a lot. I'm going to be taking a look at that. And if I don't take my eye off the ball, I might even trade it next week. Hopefully I won't miss this trade. What I should probably do, and I'm going to do that now, is I'm going to set an alert here. And I'm going to tell it to, this is one of the good things I like about TradeStation. You can set alerts here. I'm going to actually tell it to alert continuously. And I'm going to tell it to actually email me. I've got my email set up here, so that it will actually email me when and if this breakout takes place. So I'm going to do that so that I don't lose sight of it, I don't lose track of it, and just make sure those settings held. So we've got alerts on, and it's going to email me when and if that happens, and then I can look at potentially taking a position in that. So I like that setup a lot. I'm going to be looking at that going into next week on a swing trading basis. Let me just flip over to the more traditional charts here. So we've looked at, we haven't looked at currencies yet. We looked at the metals and some of the other markets. Let me just take a look at some currencies, and let me look at the bonds, and then we'll wrap up this video. So let's look at the dollar index. So the dollar index is not a lot to talk about here. We seem to be finding some support here at these lows. We're still in this really wide range between, let's call it 80.50 and 85 in the dollar index. I'm not sure that we're going to break this low, but we've got this sort of intermediate downtrend line and this kind of minor triangle taking place. I don't really have a lot on this, but we've got until and if we break out of this wide range, I don't really have anything from a directional standpoint. I think these markets are just sideways. Let's look at the euro. Now the euro is sort of starting to look a bit like a complex. It's not clean, but it's starting to look a little bit like a head and shoulders bottom. But I don't like it in the top of the range. So, that's a sort of what it looks like. I think if we can get a break above, if we can get a break above resistance here, above, let's say, this level here, then I think we could retest. Let's say if we get above 134-ish, then we could retest these highs potentially. But, until we really get out of, that's 300 pips. So that's a pretty decent move. But, until and if we can get above this resistance, 300 pips or 300 ticks, essentially. I don't really have much from a directional standpoint until and if we can get out of this, this really, really wide range. So we're just really sideways here. And I really don't have much else on that. So let me move over to the 30-year. So the 30-year looks really weak, and we broke this low going into Friday. We've had a 1-bar close below it. Momentum's a little bit, on the downside there, but we've got this, we've got the makings of, potentially some more downside in the bonds. And we were talking about in the last few videos that we had potential support here, and we were looking for a bounce. We did get the bounce. If you look at the monthly and the weekly charts, that was a pretty strong support level at these lows here, right around 132-ish. I'll just call it 132 because it's an even number there. And we did break below that, so we did get the bounce. Initially, we got the bounce going back about a week or two ago, 2 weeks ago. And then now we're breaking back down through that level. So I don't really like the long off of that level. If you were going to trade the long off that level, that move's already sort of played out. And now you've got to reassess this and say, okay, we're breaking to new lows. But you've got a minor divergence in the background. This is a really hard market to trade, right? Because you've got a low there, a lower low, and then you've got, from the same perspective, you've got a bit of a divergence going on in the background. So I don't really like this market at this point in time, but I am recognizing that we did break the low there. You would have to be cautious, I think, if you were going to, if you're going to look at trading this market. I think you need to establish risk. If we get back above 133, you don't really want to be short. In my opinion, you don't really want to be short this market above, 133 at this point in time. But having said that, I mean, this is a really tricky market, unless and if we go, momentum to the downside, this is pretty risky because you've got some divergences in the background, but from a price action and support resistance standpoint, it does look lower. So that's all I really have there. Let's take a look at the 10-year and see if that will give us any, indication on, what we're really looking at here at, I'm not quite sure why. Oh, I'm sorry. The symbol is TY in my platform. See, if you look at the 10-year here, you haven't yet broken that low. So you've got, even between the 10 and 30-year, you've got some divergences going on back there. So this is not a clean short to me. This looks a little bit mixed. So I really don't have a strong bias on it either way. And I'll just leave it at that. Now let's take a look at the USD CAD pretty quickly. And I've been looking for the USD CAD to push up to the high side, but we're not really getting a lot of action there. And essentially what we're starting to get here is the makings of a sort of triangle pattern here. If I just going to readjust some trend lines here. Let's get rid of this trend line. If you look at this, you're starting to get sort of a wedge or a triangle pattern. So the breakout of the top of this triangle pattern, I'd be looking for continuation to the high side to at least test those highs. If we break out to the downside, I would do nothing and look to see if that pattern's going to fail. Like if we do this, then I'd say, okay, we're going to the high side. If we do this, then what I'd be looking for is a busted pattern. I'd look for it to fail and then push up back through the high side, and then that's where I would be interested in this market. I'm not really interested in the USD CAD to the downside. I'm more interested to the high side, so that's why I would ignore personally the breakdown. And then if you got a busted pattern and then it pushes back up to the high side, then I would really like it. So I hope that makes sense. And I hope I've covered most of the markets. Let me just cover one more thing. We've been talking about Apple for the last couple of weeks, and talking to some of the guys in the trading room here. I was talking about Apple. If we broke above 430, I'd be looking for a test of 470. That played out. Then I was looking for, essentially, I think in last week's video or the week before, I was looking for potentially a pullback from 470, which we had. And then if we could get back up above 470, then I'd be looking, I think I'd said, 530 to 550-ish, if I'm not mistaken. And we did get, I was looking at this from a technical perspective, and we did get a push out of there, and we tested, as high as just over 500. So the question is, Icon came out, Carl Icahn came out, and posted a tweet, and that's essentially what precipitated this move to the high side. So, it's debatable whether, this was I was looking at this from a technical perspective, and it's debatable whether this was a technical event or, if it was a essentially, big money. Well, the way I look at it is I personally think that big money probably used the same analysis that I did, and they were interested in this level, the breaking above this with this complex sort of head and shoulders bottom. And this, we've had a lot of time to develop value here, and it looked like we put in this double bottom. So to me, logically, it made sense that if we could get above 470, there would be interest in this market to push it higher. The fact that Carl Icahn was the one who sort of jumped on this move and, pushed in, created interest in a lot of volume to push this to the high side. To me, that's it's relevant, but at the same time, it's really irrelevant because to me, it was a technical play, and I think that they were just acting on that for whatever reasons they have in their own analysis. Let me just be clear on this. Whatever reasons Carl Icahn wanted to get into this trade, which may be the same or may be different than the reasons I was looking at. To me, this was a technical trade, and I would expect, in order to push this through, that some big players would need to get into this market to do that, to get above this resistance. Whether it's Carl Icahn or it's another fund that's recognized the fact that we bottomed and we have the potential to push higher, is irrelevant to me. The fact of the matter is that for me, this was a technical play. It just so happened that there was a lot of news surrounding the fact that this market went higher. So I hope that makes sense. I stick by the technical analysis. It was not, I'm not saying this in hindsight. If you go back to the last couple of videos, we were talking about, the breakout of here. We're talking about a test of 470. We're talking about a pullback into support and a break back above, 470. So the question is this move over, or is this move just getting started? Well, I think we do have the potential to test, as high as 540, 545. At that point, then I would, if you're not in the move, it doesn't make sense to get in the move here. What would make sense is to get in a retest of 470 or pull back to this trend line here, whichever comes first, as, to establish, a better risk reward profile, and then to look for potentially a push into that level. That's sort of what I'd be looking for. If we just go momentum here and go right into this level, well, then you've missed the trade, and that's life and that's trading. So I personally don't like chasing moves. I don't want to get in the high here where we could have a potential swing high and a pullback. Now, there's two things I like about this trade. The one thing I like is that the indices look like they're essentially, like the majority of this move is over. Don't get me wrong. The majority of this move's over. But having said that, my trending indicators push to the high side, but now you've also got momentum, a little bit overdone here, but, we can keep going higher, and momentum can stay overdone for a long time in a strong trend. So one of the things I like about this trade is I think we do have the potential to go higher. There's a couple of cautionary signs that the other stock indices are going lower. So do you really want to trade a stock when the stock indices are going lower? Well, having said that, in the analysis of the stock indices, we've been talking about the fact that, we could be hitting some support levels and we could have a potential momentum shift to the high side. So with that kind of analysis, if we can get, some bottoming action in the stock indices Monday or Tuesday, maybe even into Wednesday, and then we get them pushing back to the high side, then, then I'd be looking at, Apple to sort of follow suit, whether it does this and that or just does that. I kind of like that. So I think you really need to look at what the broad indices are doing first before looking at what, potential stocks are going to do. But having said that, I think that possibly the stock indices may be potentially bottoming. So that's kind of a long-winded explanation. Apologize for that. I'm going to wrap this video up. I hope that all makes sense. If you have any questions, feel free to email me, dave@markettradingconcepts.com. I hope it helps. Good trading, good investing, and we'll see you at the next update. All the best.